Investors and traders, welcome to the channel. Market chart pattern today is 5th of October 2024. Hope everyone is having a great weekend or start to the weekend. We will be taking a look at the key US technology stocks and ETFs in this video. So let's start by taking a look at the QQQ weekly chart. Here we go, and what we have got is basically QQQ making a recovery high after completing this ABCD pattern. And what we can see is it's just been in a range bound formation. However, some of the stocks, individual stocks that we talk about, some of them have done pretty well, and we'll be actually taking a look at those. So it's right into this gray box that we had been talking about, and really needs to make a new all-time high for it to have a chance to move higher. But what I think is that we'll just move more on in a trading range behavior, but the momentum remains strong. You can see that this is where the 5th of August low came in, and it is pretty much hanging around these highs, but it's not making a new all-time high, just like some of the other indices like S&P 500. Now if we take a look at XLK is doing something similar. It's slightly different technology stocks combination compared to QQQ. I don't know which one is more popular, but QQQ is the one a lot of people talk about. So you can see the 78.6% retracement from this high to this low is kind of capping this rally thus far. So it really needs to get above this for it to get going. Now let's move to our one of our favorite stocks, that's Meta. So this is the one we had been talking about, and Meta has had a fantastic week last week. We were talking about uh, this region around the 56 65 56 5570 level being a resistance level. It was in fact our target with the possible resistance, and we saw some sort of consolidation take place for one week. This is because it is the 1.618 expansion of this BC swing. So it was kind of expected for the market to get there and kind of at least pause or go sideways in a trading range, and we saw that for 1 week. And now the good thing is the stock actually closed above it, and it's a pretty strong weekly close. So now it's moving towards our target of $600, and on the weekly chart we in fact have 690 as the target. So this stock could actually quite quickly get to about 690 on the weekly. That remains a target for us, and it will be a 1.618 extension of the big ABCD. So this red you see is an ABCD swing which came in around here. And if we take the AB leg and multiply it by 1.618, we get 690, and I think this is where the stock is actually going. So fantastic price action in the Meta stocks is one of our favorite technology stocks here. Now moving towards shorter time frames, so a daily chart. For the daily chart we have the shorter term target coming in around 695 to about 600 bucks. So it's pretty much there. It has actually done this smaller ABCD, and it's very close to getting to about $600 per share level, and around that time, excuse me, that price, that's our shorter term target. So if someone wants to basically trade this on a 2 to 3 day swing trades, that is the kind of region one should pay an attention to, because we could see at least a pause or a trading range to take place for a few days around here. And then in my opinion it's the weekly chart which is actually could make the stock go much higher. So Meta has performed really well last week. Now let's take a look at the stock of Tesla, because it's also in the news. So the Tesla stock, now with Tesla, it's really volatile. And then what we think is, at least on the weekly chart, we are actually in this red ABCD, which could see the stock move to $340 to $350 per share level. Everything depends upon the 5th of August low, as long as that is not taken out. But it is right here where it really needs to get above the 8th of July highs. And then we have this smaller purple ABCD completing around 313, so that's a shorter term target. And then of course 340 is going to be the big one. Now one of the things about Tesla is, and this is something really for the investors, I rarely show this chart these days, because Tesla stock has been in a lot of trading range. But look at this big ABC. It actually points to $500 per share level for Tesla. It's quite hard to believe, but look, it actually broke above this channel formation, and month of September was pretty good for Tesla. The October has really started in earnest, and if it is able to get above this swing high, there we go. Then I think it has a really good chance to take a stab at 314, 313, and getting above that. Of course, on the weekly chart, we have 340 as our target, but as high as 500 could be actually looked at. Now, for all of this, um, it's really that the 3rd of January 2023 lows are not taken to the downside, and where we are at the moment and where this low is, there's a pretty big gap in price in there. So yeah, Tesla is a really interesting stock, but also pretty volatile these days. It has always been like this in my opinion. And this is the shorter term daily chart, and you can see the price closed at around 250 bucks per share. But it is this trend line has been maintained, so we are actually looking for um, the positive momentum to remain strong. Now there's an event coming up with regards to the robot taxis, so perhaps this buying might have to do something with that. I don't know exactly how the event might pan out, but the price has been actually moving higher ever since it put in a low on the 5th of August. So that is a really important low that the price should not take out to the downside. Now let's take a look at the stock of Apple. We'll just move over to the weekly chart for this. Now Apple has had a trading range week last week, and it does appear that this gray box that we have drawn, there's pretty strong resistance here, which the stock is not able to take out. It's only if it is able to get above the highs of 15th of July, that which would indicate to us that Apple is in fact in this ABCD higher and could actually go as high as 262. On the flip side, if the 5th of August lows are taken out to the downside, then the whole analysis changes, and we could have a possibility that this market is actually moving a little bit lower to about $190 per share level as a possible target to the downside for Apple stock. And if we just move to the daily chart, what we can see is, look, last week's price action, it's more of a distribution kind of thing than on the accumulation side, and it remains, this whole region remains a trading range. So yeah, it doesn't look like a pretty price action on the daily chart for Apple. Now let's take a look at the stock of Google. So let's go move to the weekly chart, and it has moved right into this area that we were looking at, and of course our opinion on Google is not as favorable, for example, as compared to Meta. So there is a chance that actually we might actually be in an ABCD move lower, which could see the price move much lower. Um, if it is able to break below the 9th of September lows, then we could be looking at 123. But most likely, it's just going to remain in a trading range to the downside, and it is pretty much hitting the resistance levels that we had been looking at. Now on the daily chart, let's move down a time scale. So you can see that from what you see on the RT is, this is right translation, and this is LT's left translation. So this is something to do with the cycles theory and the phases which are involved in a cycle. So the easiest way to think about this is that, okay, look, you had the price action in which a top would come in and the market would go through a correction, and then it would actually move higher and take go above this swing high. So it was going above, or on from the right hand side of the chart, it was taking out the left hand high. So it was right translating. This is what RT means. But now here it's the opposite of it, so it's a left translation, because just the opposite of this is just the market is actually taking out the swing lows. So this is in my opinion, what I think is that maybe it's able to get above into this gray box, but the stock is actually looking weaker in my perspective. Now let's take a look at the stock of Amazon. There we go. So Amazon, because it is also a retailer and it's got its technology, AWS, the cloud side of things, where there's a lot of competition coming in from companies like Microsoft, Google, and there are other players as well. So the stock is just reflecting this, that it's just made a recovery high to the 78.6% retracement of the highs which came in July of this year. So we're just watching this, but the chances look like if there's gonna be another all-time high, it might be a marginal one, or the chances are it is actually likely to move a little to lower, and then it could do an ABCD where this black line is. So just watching this one. There is one more possibility that it could actually do the whole ABCD of this BC swing to around 217. So that might be the kind of the upside available for this stock, but more likely to do a trading range behavior. And this is really interesting because we have, from a retail perspective, the fourth quarter coming up. That's when majority of the sales happen for retailers. But there is something with the retailers which is going on. So it's actually topic for another video, but I just wanted to show you a chart of Costco. And you can see that the Costco has been a monster, has had a monster rally ever since the COVID lows. But it's also actually for the last entire month. You can see that it's just a trading range which is taking place for the last 4 weeks. So something interesting happening as we approach the big holiday season with the retailers. So Amazon is just not immune to it. Now let's take a look at NVIDIA. Here we go. So NVIDIA is looking strong actually, and on the weekly chart you can see that this is the pattern that we have been watching, and NVIDIA is likely to go and hit another new all-time high. 155 is our target, but anywhere between 155 to 170 is most likely for NVIDIA. But then it will also be forming this kind of an expanding wedge kind of pattern formation. So 155 to 170 is the kind of what we are looking at, and the key thing is that the lows of 3rd of September are not taken out to the downside for NVIDIA. So NVIDIA is gaining strength or momentum, and here we go. So last Friday it went slightly above this downtrend line here. Now I think shorter term we are seeing this blue or this purple ABCD, which could actually go and challenge these highs of 20th of June, but the price action in NVIDIA is beginning to look much better after going through this entire trading range consolidation, however you want to call it. This is what NVIDIA is doing, is beginning to look pretty good now. Ideally I would like it to get above the 130 level, and then 155 will be the target we are watching. Another really interesting thing is look at this trend line I've shown you here. It's right at the 38.2% from the October 2020 lows. So this stock remains, in my opinion, in an uptrend formation unless this low is taken out to the downside of the 5th of August. That's really key. That will change a lot of things for the stock. As long as it remains above that, positive for the stock. Now let's take a look at Shopify. Here we go. So the Shopify is actually doing a little bit better. Um, and I think it's in this ABCD higher. We could see 94, maybe $100 as well for this stock. Now let's take a look at Zscaler, another really volatile stock that we have been watching. So the past week was a little bit better because we had a positive week. I think some strength came into the stock last Friday, so we'll just watch that. So we have two possible scenarios. Our ideal scenario is that we are in an ABCD formation higher. Shorter term target is $220, and getting above this challenge of these swings from 5th of February 2024, and then getting above this could actually see us in getting into about $320 range. On the downside, if the lows of 9th of September are taken out to the downside, basically essentially getting below this 61.8% retracement around $150, then this ABCD in black is in play, which could actually see the stock move to around 103 to 100 to about $100 and fill in this gap here. So bias is still to the long side because the 61.8% retracement has held for so many times, but it remains a choppy trading range behavior with the bias to the upside. But be prepared on the break of 150, it could actually move lower to about $100. Here on the daily chart, you can see that there's just not much of a price action around here. This really big gap that is worrying for me because it has just completed, it's not even completed 50% of this gap, so there is a fair amount of weakness in this stock. And now let's take a look at Roblox. And here we go. So Roblox is actually also going through some weakness after completing this ABCD, smaller one in black here. So not totally unexpected because we had fair amount of resistance coming from a structure here, here. So it needs to gain further strength, or maybe it pulls back right into the moving averages around here. Let's see where we are in terms of our Fibonacci levels. Looks like we are at the 38.2% retracement. There we go. So if it's able to get above this or put in a positive candle and ideally take out the highs of the 30th of September weekly candle, then in my opinion we would have held the 38.2% retracement support, which would be pretty good because it means in stronger trending markets this support actually is really key, and we could see an ABCD formation getting clearing the highs of the 8th of August 2022, so going back about 2 years, a little over 2 years, and that could actually see us tackling this 38.2% retracement, which comes right at the $67, which this will be our target for Roblox. I think I've pretty much covered the stocks we normally take a look at. For Baba and Tencent and some of the Chinese stocks, I will do a separate video because I'm tracking them in a separate playlist. So keep on the outlook for a video to come, most likely tomorrow. If not tomorrow, then Monday, in which we take a look at that. I think Monday might be a little bit better because the Chinese market was closed. It might still be closed on Monday. I'll have to double check because of the um, Golden Week holidays in the mainland China. And while the New York Stock Exchange listed ADRs were trading, I think once the mainland market in general opens, that will actually give us much better price action as well. So I'll have to see if I see we're still on holiday, and I might just still make another video just on that topic with the Alibaba and Tencent and some of these Chinese stocks, is Baidu. So thank you very much for watching the video, and if you found this video of educational value, give it a thumbs up. And if you like our technical analysis, how we look at the markets using Fibonacci retracements, extensions, price projections, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted, and this way you will not miss on anything. So have a great and fantastic weekend wherever you are, and speak to you guys soon, and good luck and good trading.